Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 3rd of April. All right, as we plan the week ahead, the best starting point is last Friday's US numbers. Now, week across the board, personal income lower than expected, personal consumption and PCE price index also lower than the prior numbers. So that tells us that the US Federal Reserve's interest rate hiking cycle is really putting the brakes on the US economy. Now, you can see this very apparent on the charts here, but let's come over to the global markets first, and then I'll come back to the currencies. We can see the equity markets screaming to the top side, taking out a load of stop losses. Okay, for equity traders, looks like they're pricing out any further rate hikes at this point. The reaction on the dollar, though, has been a little bit mixed. Now, just looking at the key news, also, just have a look at one of the key aspects is oil screaming to the top side. OPEC announces surprise oil cuts once again. Okay, so that's going to put downward pressure on dollar CAD. You look at gold, right? This whole safe haven thing, you know, especially around SVB and everything else that was going on with regards to the banks, that whole scenario now has really dissipated, and the safe haven trade there with gold might be over. And if you're not sure, well, Bitcoin is attached to the safe haven trade, and gold and Bitcoin are sort of trading pip for pip. So if you're looking at the cryptos, keep an eye on gold. As far as the major currencies go, let me just come over to the currency page because it's a little bit interesting. You're seeing the dollar, right, just starting to try and lift its head up on the dollar index. It hasn't really gone far. Dollar Swiss is a mirror image of the dollar index. Dollar yen, well, it's still cruising, doing its own thing. Dollar CAD, as you can see, it is hammering to the downside, especially with that OPEC announcement. But you've got sterling, euro sterling, Aussie and Kiwi. So Aussie and Kiwi are sort of following their own paths at this stage. We do have the RBNZ and RBA interest rate announcements this week. Sterling, euro, well, they look like they're breaking down, right? But I was just having a look on the longer term charts here. Just be careful because short term, I agree, it looks like it's going down. But check out the daily charts. This sterling is by no means breaking down on the dailies. And if you have a look at the euro as well, you can sort of get sucked into a short trade here when really euro is sort of still heading topside. Okay, so just be careful at the start of the week. You know, I almost rushed in and started getting short euro, but then having a look at the daily charts, the longer term perspective doesn't match up with the short term. So there's a bit of a mismatch. So the easiest thing to do at that point is come back to your calendar and have a look where all the major action is. Now, there's a few things here that aren't really highlighted. Now, the high impacting stuff are the numbers there where the time is in red, but home loans is very sensitive for the Australian market. That's going to be important. Also, something that the RBA is considering on Tuesday. Now, 0.25% factored in for a rate hike on Tuesday. We've got the RBNZ, okay, on Wednesday. Now, the Kiwi economy is extremely tiny, right? The door to exit that market is very small. So the RBNZ is going to be very careful because if they go 0.25 too far, that economy will just shut down, right? And that's something we've seen over the last 30 years. RBA Governor Lowe speaking there as well. So early in the week, maybe Aussie Kiwi sort of whipping around, maybe something to focus on. Now, the important aspects for me, well, the really good part, I should say, is Canadian employment numbers, okay, coming out Thursday, non-farms Friday. Now, this should be like that every month. It would be a joy because then you've got two separate trading opportunities. But just connect the dots, right? So US numbers this week are going to be very sensitive. The PCE price index lower, personal consumption lower. If the non-farm payrolls, I really wish this number was coming out Monday, Tuesday, because we'd have all week to trade it. These numbers come in really weak. Okay, it supports the lower inflation numbers that we got on Friday, and that could really lead to a big dollar sell-off. Maybe not. We'll see. But definitely one area that it will be, if we get weak numbers, in the equity markets will continue to rally very aggressively. Dollar CAD, well, with oil rallying, dollar CAD's heading to the downside. CAD's stronger, so maybe stronger CAD numbers supports that trend. And so going to be something that we need to look at closer towards the end of the week. Now, we do have the ISM manufacturing numbers there as well, a bit of a key number there for the US economy. So what we're trying to work out is, are the US numbers all trending lower? To me, they are starting to all come in lower. So it's well worth trying to sort of weigh it all up, because the move on the dollar may start on the ISM manufacturing numbers. We'll have to wait and see, but the back end of the week here is looking particularly attractive. All right, so that's where the major action is. Don't forget, we are coming into the Easter break, which is a little bit of a shame, because we are starting to see a bit of a build up here in the technicals, and that's where the better trading opportunities are. So one other thing is just that Bank of Canada business outlook, Bank of England financial policy. Yeah, I wouldn't be too interested in that. But just have a look at the peripheral numbers, because once the numbers start trending lower, the market will start picking off the tier 2 numbers, right? Which is, retail sales and a few other things like that. Manufacturing numbers could be the catalyst for the move. Okay, will there be a square up pre-Easter or not? I'm not sure. But I can tell you what, there's some great build-ups here on the technical side of things, and that's where the opportunities are. So just be careful, like rushing in here. I like the idea of euro and sterling lower, but you're really looking for something to support the move, either fundamentally or technically. And technically at the moment, these instruments or these currencies are still heading topside. To me, the best trading opportunities, I think, will probably come on the equity markets. Okay, they are reacting very well to the weaker US numbers. Okay, so that's you can easily piece together the dots there. Okay, weaker US numbers, no less chance of an interest rate hike, equities higher, whereas the dollar itself is in a little bit of a stagnant state at this point, as the markets transition from the hiking cycle to now sort of drifting lower. All right, guys, good to be back. And any questions, let us know, and all the best for the week. Cheerio.